Hey QuickBooks users, in this lesson we're going to look at something called prepaid expenses. And this is a very confusing topic for some people because they hear expense and they think it's an expense. But what we're going to see is that a prepaid expense is not an expense. So let's say we prepaid for our insurance for the year, and our insurance is $100 a month, but we decided to prepay for the entire year. Well, let's look at that situation from the cash basis and then look at it from the accrual basis. So if it's a cash basis, then it doesn't matter when we use the insurance, it just matters when we paid it. So we would just consider this an expense. Let's say we sent them a check. So the name of the company is Brosnahan Insurance Company. We're writing a check. And we're going to put this in the insurance expense because we're using cash basis. It's an expense when we paid it. So we'll add this account. The account's going to be an expense account because we're using the cash basis in this example. The insurance cost us $1,200 because it's $100 a month, but we're paying for 1 year in advance. So there you go. The expense is put in the month in which we paid for it. We would just save and close that if we were using the cash basis. However, what if we were using the accrual basis? And so we paid for it for a year, and so instead of calling it insurance expense, because it's not an expense, because we're using $100 a month, that's the expense. It's $100 every month that we use the insurance. Instead, we're going to call it prepaid insurance because it's going to be considered a prepaid expense. Notice this account is an asset account. It's because under the accrual basis, when you prepay for something, that means you have the ability to use it as a resource for a year. So we've got a whole year where we don't have to worry about insurance. We've already paid for it. And so we consider that a resource rather than an expense. As we use that resource up, that's when it becomes an expense. So at the time we prepaid for the insurance, we're going to call it a resource called prepaid expense. Don't get confused when you see prepaid expenses. Any prepaid expense is actually an asset. The amount's $1,200. Alright, so that's great, but then at the end of the month, we used up 1 month of insurance. So let's go ahead and put that in the system. We're going to do a journal entry. Notice how the insurance expense is debited for this month because we finished the month, we used up 1 month's worth of insurance. Then the prepaid insurance, which was the asset, gets reduced by the amount we used up. We have $1,200 in prepaid insurance, but we used up $100 of it, so now we only would have $1,100 if we looked at that account. When you look at the insurance expense, the expense is then going into the month in which you used it. You would then do this again the next month, so then in the next month, at the end of the month, you used up another month of insurance, so you whittle it down month by month as you use it up. This is the accrual basis, and the accrual basis says the expense only hits us when we use up the resource. Remember, this is different. If a company is doing the cash basis, then the expense just matters when they paid it. So the difference is the timing. The accrual basis looks at when something's actually used. The cash basis looks at just when the cash flows one way or the other. Again, you would either do the cash basis or the accrual basis for a business consistently. You wouldn't do some things cash and some things accrual. Everything would be consistent.